Yeah, I'm losing my edge.
I want to get into our main segment here for today. I think it's an interesting one. It's one that I've loved adding to my portfolio for a while. It's spread trading stocks and commodities. This is one that, given how many different products we have at our disposal here in 2022, Jermal, you can really make a nice clean trade out of commodities like crude oil, like we're going to talk about today, but also gold and these other markets and the stocks that deal in that commodity, and just spreading off the two markets against each other so that you don't have to be flat out short crude or long crude. You can play the divergences and convergences between the stocks in that sector and the commodity itself.
Yeah. And, the thing about it is, like you just pointed out, there's been a lot of these commodities that have been basically kind of trading together more recently because of the current environment. And so this creates a good opportunity to be able to do that.
Yeah, you always want to try to add diversity here to that portfolio, as opposed to like, oh, crude oil's up, oh, gold's up, and guess what? Soybeans are up as well. I'm going to get short all of them. Whenever you can, get short a couple of things in the commodity space and lay off some of that risk by buying something either in commodities that's underperforming, or like we're going to look at here today between crude oil and its stocks, always a nice play to spread some positions off. You don't want to have a bunch of single underlyings, Jermal, that you're on the same side of, right? That's a disaster.
It's a real disaster, especially in the commodity space. I mean, let's face it, commodities can be a little bit more volatile than most other things. So if you have the opportunity, and like we said more recently, you've been seeing this opportunity of oil and gold and, beans and wheat a little bit kind of moving in the same direction. There's all this. And I think at least three of those have maybe not gold, but has backwardation in their future. So it's again, a lot revolving around the same issue. And I think that creates the ability to do some type of spread off.
Absolutely. And you look at the correlation here. This is the rolling correlation for the last year plus between SMO, small crude oil futures, and XLE, which is the Energy Sector ETF. And that's got, a bunch of energy stocks that are closely tied to crude oil, the commodity itself. That high correlation makes me feel pretty confident. And the fact that it's consistently high, Jermal, that I can spread these two things off against each other. And then it's just a matter of, and a lot of people hitting me up about, oh, how does your watch list, how does your, you looking at these different markets work? And really my mind goes like commodities, equities, all these different asset classes, comparing them to each other. If I know I can lean on the fact that, two things are highly correlated, like energy stocks and energy itself, then it's just a matter of like, is one up a lot and the other isn't up, or the other one's down? And this is what we saw yesterday. And now crude oil, it has come in significantly from the highs, but you see this big divergence yesterday. Crude oil up a few percentage points to kick off the week here, and XLE yesterday trending with stocks lower. You see a divergence like that. And to me, it's as simple as, I know they're highly correlated. I've got these commodities that are all doing one thing and I want to lay off some risk. I just get on the other side of this trade. They're diverging, Jermal. I just want them to come back together. Is that simple enough?
That's simple enough. And it just so happens that this kind of, I know a lot of people are like, how does this happen? Like in those situations? Well, sometimes these energy stocks that are within something like an XLE, I mean, there are days where they're going to act like stocks and they're going to move like other stocks, right? Like, I don't know how big the divergence was as far as like if oil was down and oil was up while they were down. I don't exactly know if that was the case yesterday. I don't remember. Maybe, but it's rare, but it may happen.
Yeah, it was the case yesterday. And you're exactly right. It is rare. And that's why I bring this up. I was kind of hoping that the divergence would continue a little bit today, letting people, maybe jump on that opportunity. But you do see these periods, like the fall of 2021 here, where crude oil is just outperforming to the upside energy stocks. And then it comes back and it trades actually below energy stocks in this time frame. And then you see them kind of trading on top of each other somewhere like here. There's not really a ton of opportunity, But yesterday, when you've got that divergence, for me, it's like if you're looking at two similar markets and in a day, their net changes are diverging by 1% to 2%, that is an interesting day trade opportunity to me. And then in a longer term view, if you have two markets like this and they're diverging by, 5 to 10 to 20%, that's an opportunity for a longer term trade. And what's really nice and clean about this is XLE and SMO, they're similarly priced markets. And so the ratio is really 1-to-1 when you're talking about one futures contract to 100 shares of XLE. Very clean, letting you get on side of. And this is the pairs market that you see here, the spread going back and forth, back and forth. And like I say, in the fall, like we just pointed out, the spread got to a high. You see in that same time, that's when crude oil is outperforming XLE. And then that spread comes ripping back. Hopefully seeing something similar here. It's off its highs. If you want to throw something like this on, you still can. You're not getting the best prices like you would have yesterday. But what's really nice is you can toy around with this, Jermal, and do, one short SMO, short put at the money in XLE. Or you can do the one futures contract to 100 shares. You can cut it a bunch of different ways.
Nice, man. This is a, I mean, look at that. Look at the kind of move in this spread here. There's opportunity there. I like it.
Absolutely. Absolutely. And so, yeah, there's